Chairman, Secretary Generals, Director Generals, dignitaries, ladies and gentlemen. In 1986 and 94, the International Arab Banking Summit was also held here in Vienna, as you heard. So it's the third time. And we all, me now as a present speaker, very proud that you have selected again Vienna as a favorite place for that important meeting. Also, Austria takes that meeting very important. We have developed in the meantime very good relations with the summit and the bankers community. In order to very clearly state the importance of this very meeting, in '86, the summit took place with and under the presence of the then Foreign Minister Leopold Gratz, in '94 of the former Austrian Chancellor Franz Wranitzky, and today, as you have seen, the Vice Chancellor was here, and also Dr. Novotny is presenting from the National Bank's part of view, the official Austria. I'm a sort of elephant in this room. I have participated in all of those meetings. This is also why I'm called the honorary president, because I'm not even fit for a normal president. Thank you. Now, the success of the International Arab Banking Summit here in Vienna also somewhat is related to the Austro-Arab Chamber of Commerce. And one man, that is Nabil Kuzbari. He is the founding father of the Austro-Arab Chamber of Commerce. He has been strengthening the ties between Austria and the Arab world ever its foundation in 1989 by supporting the bilateral and multilateral cooperation between Austria and the Arab countries. And finally, he has been a viable sponsor of many activities of the Arab world, specifically also with regards to banking activities. Now, as one of the evident results of these efforts, the total trade volume between Austria and the Arab world almost doubled in the recent years and amounted to 4.5 billion in 2012, while the most important trade partners are Saudi Arabia, Libya, and the United Arab Emirates. Now, let me now come to the more banking type topic, major changes in European banking after Lehman. Now, banks in various parts of the world are facing similar challenges. A slowing global economy and a continuing financial crisis. The current financial crisis, which started in 2008, has also had an impact on the banking system of Arab banks. Similar to European banks, Arab banks have improved their risk management processes, strengthened their balance sheets in terms of capital and liquidity. Now, what differentiates Arab banks from European peers is the economic and political environment. GDP growth in many Arab countries is strongly linked to the price of commodities on global markets. Banks operating in these commodity exporting countries are so far shielded from the sovereign debt crisis in Europe. Now, the HSBC oil and gas team expects the price of oil to stay around 90 per barrel in 2013 and concludes that this price level should be sufficient to support the growth of banks operating in oil exporting economies. I find this as an important fact, as banks are in general the driving force of economic recovery, especially during and after times of crisis, and act as important catalysts in order to restore stability and confidence in market. The latter is the topic of this conference, and as far as I've seen also for the first panel, which deals with the civil capacity building in post-conflict phases. Now, coming to the overall changes in banking after Lehman, it is important to recognize that the European banking scenery has completely changed. What used to be growth and market share is now capital, risk, and costs. Also, the loan growth in Europe has substantially slowed down due to two reasons: less demand and less lending capabilities of banks due to the above listed reasons, mainly risk costs and capital requirements. So the opening of liquidity by ECB following the Fed did not solve entirely the problem that we have. While liquidity here is in abundance and rates came down, banks cannot lend as they wish due to the regulatory impact, forcing them to increase capital very fast. The determining factors of banks' policies nowadays are the following, and I've just mentioned a few. First and foremost, the overwhelming regulatory burden, and there is more to come by Basel III. Second, the current macroeconomic uncertainties will prevail because the adoption of EU legislation will take time. Consequently, growth will pick up only gradually, with the US and China as the still determining factors for worldwide growth. Non-performing loans will reduce only gradually. The fight for new, good customers and the concentration on home markets will add to competition and market pressures. Consequently, costs and efficiency measures are one of the very few alternatives to balance diminishing banking profits. On the other side, I see a number of opportunities for banks in this environment as well. First, there will be an ongoing deleveraging. Banks with a weak or non-functioning business model will pull out of the markets. Generally speaking, I believe we have too many banks in Europe. It's outdated. The development did not follow the market changes. And therefore, I believe we should not rescue each and every bank on this continent in the future. Number two also deals with deleveraging, but for another reason. Non-core investments will be exited, leaving opportunities for those banks that deal in a market or a product as a strategic player. Number three, banks which have used the time ever since 2008 to change will be able to benefit from improving markets and will grab market share. We will see, and you will experience a change, a total change in the banking landscape in Europe in the next 5 years. Number four, the general discussion on post-growth era and on post-growth business models has just started and gives plenty of opportunities for new products and distribution models. As a result of this difficult environment, sustainable ROEs have decreased dramatically in recent years, and most Western banks do not earn their cost of capital anymore. Global banking returns on equity fell below 10 to 12% average cost of equity in the last years. Consequently, growth and profitability comes mainly from emerging markets. And again, coming to Western European banks, they have earned in the last many years, the last 5 years in average 0%, if I include the peripheral country banks. Whereas emerging Asian banks have reached almost 17% ROE, and Central and Eastern European banks on average of 13% still. Coming to one of the critical remarks about Central and Eastern Europe from my fourth speaker. Also, banks in Middle East and North Africa are still structurally profitable. They are expected to have an average return on equity in 2013 of about 15%. Now, this is mainly a result of the commodity link that I mentioned above, and the overall stronger GDP and loan growth in the region due to what I call the natural catching up process of emerging markets economies. This is the very reason why in 40 years of banking I have been always following doing business in emerging markets. I'm an emerging market favorite. This is the region where you have a natural growth, and you permit me to use the expression, you do not have to kill your competitor in order to stay in business. A last word, and I'm sorry that Vice Chancellor Spindler is not here, a last word addressed to politicians and economic decision makers. First, a general growth climate needs well-functioning banks. Clear. Number two, banks cannot act as scapegoats to fund budgetary deficits. Bank taxes and other profit burdens reduce the capital base that, on the other hand, we are requested to increase dramatically. A concerted action between banks and policymakers are the prerequisite to initiate economic growth. And this is, ladies and gentlemen, that is needed. I wish you all an exciting and informative International Arab Banking Summit, good discussions, and a nice stay here in Vienna. Thank you.